Welcome. Let's take a look now at some of the events to watch out for on Wednesday, the 1st of November. After fund managers have a chance to regroup after the end of the month, there's an opportunity to reopen accounts for some of these. But I think the message is quite clear, and we'll see the message continue, that geopolitics continues to haunt the markets. And also what's happening with the Chinese economy. Now, we've already seen some poor NBS manufacturing PMI data out this week. And on Wednesday, we get a chance to take a look at the private manufacturing PMI numbers. We're looking there for a break of the 50. Anything over 50 is expansion. The NBS number showed a contraction on Tuesday, but we've got this seeming attrition continuing in the Chinese economy. And for this, I'll be watching what's happening with the Hang Seng. I want to show you the chart here. Now, we've broken this recent line of support and we're now trading underneath that. And we're now using that as the line of resistance. 17,122 is where we are. And this is a 24-hour market on the IG platform. Just to give you some sort of context, we're currently about half an hour away from the start of US trade on Tuesday. But certainly, I think if we do get another poor number, you can see today's drop of 1.5% almost. I can quite clearly see this line at 16,825 being broken if we do get a number that's poor. Don't forget, though, a couple of days ago, we saw evidence coming through from HSBC Bank suggesting that the worst is over for the Chinese economy. Will that be seen in these Caixin numbers? Let's move on, take a look at what else is coming through, because here in the UK, we've got the UK Nationwide House Price Index, another market where we know that things are yet to find a bottom. It'd be interesting just to see how far down house prices have gone in the most recent reading. The consensus for the October reading is there for a drop year on year of 4.8%, added to the 5.3% I think it was this time last month that we saw year on year. So potentially possible slowdown, but certainly looking at some of these house builders will be the way through to trade this. If you're looking at that number as an opportunity to trade the markets on Wednesday morning, we'll be covering this just before the early morning call on Wednesday. Then it's all about what's happening with the rest of the week so far as the dollar is concerned. We get ADP employment numbers out on Wednesday. UK time, it's 12:15 in the afternoon because of the fact we're only 4 hours adrift now in terms of the time against New York from London. And for this, we'll be watching the dollar basket. But it's not just that. We get PMI numbers out from the ISM manufacturing figures and also the JOLTS job openings. Then at 6 o'clock in the evening UK time, the Federal Reserve interest rate decision. It's not expected that we'll see any move, but I certainly think that we could well get a steer on the dollar as a result of what the Fed is going to say. I want to show you this chart. This is a well-trodden path for me because I've been talking about this Andrew's pitchfork for a while now. And you can see the way it trades in these bands. And it's trading quite nicely in the band at the moment between these areas of support at 104.87 we saw. And we're currently looking as though we're wanting to test this line of support at 105.51. Now, it's technically, if you are long on this, your stop goes underneath the underside of that area here, probably down here really, if you're long going into the Fed decision. Technically, you want to put a stop at 104.75 with a view to taking this up, possibly to this area up here, close to the 107 level. If you get a particularly hawkish Fed tomorrow, and one where the Fed is mindful of the fact that we are nowhere near the bottom in terms of inflation, which I think possibly is well received in terms of messaging, and we'll have to see just how much of a hawkish message the Fed sends through. That's at 6 o'clock on Wednesday evening UK time. Let's take a look as well at what's happening on the oil markets, because we've recently seen the World Bank come through with a warning that the oil price could well lift up to $150 a barrel if we see a continuation of geopolitics, escalation of geopolitics in the Middle East. The EIA crude oil inventories tomorrow. This is sometimes a number that it's worth looking at in terms of where it moves. And we've seen some supply constrictions, but it's been a bit of a rocky ride in terms of the overall numbers for the EIA figures. If demand dries up, you'll get an increase in some of these inventories. If you see demand race ahead, you'll see then inventories dry up. We are looking at this area here of support for the WTI price at 81.51, which is the 76.4% retracement. You can see we've been here before. You get a breaker there, you're then on the way down to a total retracement at 77.56, but I'm not completely sure that's going to be the case. And if we do see an escalation of the events in and around Gaza and whether or not it brings in Iran, if it does, then I think that all bets are off, and it's all just a question of how high this market can go, in which case you take a long position with your stop under recent price action. And just wanted to follow up on some of the corporates worth watching. Here on this side of the Atlantic, one of the headlines is definitely going to be GlaxoSmithKline, whether we get Aston Martin, Lagonda next as well in a trading statement for the third quarter. Just interesting to see just how strong the retailer is, or the retail market is here in the UK. But I want to take a look at GSK. The GSK looks like it's rolling up. We've seen a testing of recent support, and we're currently trading up on the session today, up for the second day in a row, up 2/3%. GSK is one of these companies that is a defensive play. It recently spun off the Haleon business, which you can see here, that big drop in the share price we had back in the middle of summer last year. And Haleon has done particularly well. It's still divesting some of its interest in Haleon, but still owns a fair whack of it. I think we're around 12%, I think. So GSK, it'll be interesting to see just where it's getting its earnings in from and just how good it is in the current market. So it's certainly a defensive play. US markets, Kraft Heinz, Avis Budget, AIG, that's an all-session stock on the IG platform, Mondelez as well, and also Kraft Heinz. I wanted to pick up on Kraft Heinz. It's one of these companies with a lot of well-known brands in the stable. But you can see here it's testing this long-term support at 30.68 that we saw the recent lows at. And those lows took us down to levels not seen since the 13th of November 2020 for Kraft Heinz. The problem is for these companies is that they have to contend with a lot of inflation. Now, the inflation for their input costs is quite high. We've seen this from Reckitt Benckiser. We've seen it from the likes of Unilever and other companies that have a large number of brands. And Kraft Heinz is no exception. And we continue to see this downside here because of the increase in input costs. And the fact is whether or not they can actually deliver those through to the end user. If it turns out that we get a number coming through tomorrow for Kraft Heinz that show that there's margin erosion because of that it wants to absorb some of the increase in costs, then I think there's a potential for a testing of this line of support at 30.68. And that's it for our look ahead to November the 1st. I'll be back at 7:30 in the morning with the early morning call for the European markets, and then later on in the day at 12:30 as we see the markets begin to respond to some of the economic data out ahead of the Fed decision. At 12:30 is the Beat the Street look ahead to the US markets. Hope you can join me then. Have a good evening.